This is a CNBC Special Report. Markets in turmoil.
Turmoil in tech to the sell-off around the world. What's a skittish investor to do? Joining us now, David Sowerby, Chief Market Strategist at Loomis Sales, and Stanley JG Crouch, Chief Investment Officer at Aegis Capital. To both of you, thanks for joining us. So Stanley, you're sitting next to us, so let me get to you first of all. Sure. We would all love to know what's going to happen next, and you're saying look to history for some clues.
Sure. One of the things we've been focusing on is, although this is unlike anything we've been through, we believe, because of the confluence.
Really? 3 years ago, it's not like anything we've been through?
No, we don't think it's like 2008, 2009. We think it's different because the effect of the sovereign crisis around the world in developed sovereigns, these aren't outliers like the Argentina crisis, is really profound. And what's going to be done about that? You know, if we look at Europe, we think of it sort of in terms of dysfunction at the national level, because the way I looked at it, Angela Merkel got her bill this morning. I think that's the way the market's...
Yeah, but are they writing bills that their bank can't cash? If you look at the number totals and you still wonder where's the money coming from without a common euro bond.
Yeah, there's a lot of call for a euro bond. I think what's needed is consensus, a lot like our political system needs consensus to give confidence. We think this is a real crisis of confidence throughout. And what is going to spur that confidence where investors will be a little bit calmer? We've seen a lot of volatility. On the good news, we've seen order in the markets. That's been something that I think is pretty
Order in the markets? In what way?
Order because you haven't had...
Sell orders.
Well, sell orders, but you've had buy orders too when the markets have gone up. What I'm saying is order in the markets. There's no news out there about a lack of liquidity.
Well, I don't know. I mean, Europe is starting to look a little bit like that way. I mean, we're starting to see interbank lending in Europe between the banks there.
That's true. It's struggling.
Slowing to a dribble.
No, that's the issue. And when you get to it, David, if you take a look at the issue of what's going on in Europe, I'm getting to the point of getting so sick and tired of just hearing this is a psychological thing. My goodness, what we have going on in Europe. Yeah, because what we have going on in Europe is something that is I mean, some people still think it's like what happened here in 2008. It is just working its way through the system.
It is, and we had the problem a year ago. It was addressed with a Band-Aid when it needed stitches or maybe even a tourniquet. They're doing the same thing today when they talk about transaction taxes in Europe. It's spread, obviously, into the larger countries, the larger banks. Earlier, you talked in the show how so many of the European banks were down 40 to 50%. You know, the solution is woefully short, and until the solution is better, both in Europe as well as in the U.S., we're going to have challenges ahead.
That's the point. What's the solution? There are $100 billion off. Okay, restructure the debt.
Restructure the debt.
I agree with them in restructuring debt.
That's got to be it. If you're going to get 70 or 80 cents on the dollar, that's what you're going to get.
Stanley, let me jump in. So, David, then, I'll ask you. And I know other people that are saying the same thing. So when I show our viewers that Commerzbank is down 57% this year, UniCredit's down 40%, is the market already pricing in sovereign defaults?
They're pricing in enough sovereign default that investors will only get some fraction back on the problem sovereign debt.
And how likely is sovereign default?
Yeah, I think it's probably where they pay back less, not actual default, but where they pay back less. That's a reality. You know, and it's a reality here, too. I mean, the U.S. banks are off 30% year-to-date based on the Keefe Bank Index.
Well, because
you want to stay light on the banks in this environment. If you want to own financials, you probably own the asset managers or you own consumer finance, but you want to stay light in financials.
When I hear paying back less and not equated with a default, that is a default. But my view is I've done restructuring. The best hit is your first hit. The best hit is your first hit. Make it work well. Make sure you've done enough sensitivity and analysis going out that in troubled events going forward, you can sustain it because you don't want to come back to the well a second time.
I agree with Stanley. Listen, if I borrow $100 from you, right, and I say, Mandy, I can only pay back 95, and you go, no, I want the 100. I said, then you're getting nothing.
Right.
I mean, I've essentially defaulted, and that's what David you expect to have happen then, right?
I think they'll
because
pay
if they
a
don't,
fraction
they're going to have
back.
to have the more austerity, and we're seeing what happens. Financial crises, according to Carmen Reinhart and Ken Rogoff, studied 800 years of history. Financial and banking crises always become political crises because it ends up on the backs of the people, and they get pissed off, and they don't want to deal with it.
Well, they do.
Ticked off.
They do, but encouragingly, out of all this chaos is coming opportunity. And an opportunity is on the micro level, where I'm able to get solid franchise stocks that are generating believable and real cash flow at 12 times earnings, 7 times EBITDA, 6% or better free cash flow yields. I don't get those opportunities very often. And in the end, valuation matters the most when you have believable earnings and cash flow behind it. And for the companies that we're talking to on the small mid-cap space up to the large cap space, they are doing quite well with orders. They're doing quite well with inventory. They're still reluctant to spend. We know that total cash as a percent of total assets is 11%. They've got to be compelled to spend that cash.
David, thank you very much for joining us, Stanley. Thank you for coming in tonight as well.
I should have had 1 cup of coffee before the show, not 2, so my apologies.
Yeah, blame it on me for trying to caffeinate the whole team.
You're like, want another cup of coffee? All right, thank you very much.